Recently, I came across TradePro's new best highest profiting strategy and the results were impressive. In his backtest, this strategy had a 74% net profit after only 100 trades. Previously, I've already reviewed TradePro's channel and confirmed that he posts real backtesting results. But I wanted to take this strategy backtest one step further. So, I decided to put this strategy to the test and backtested it an additional 100 times starting from where he left off. The results may surprise you. Now I will show you the rules of the strategy, then the backtesting process, and finally the results. Without further ado, let's get right into it. Okay, for this strategy as always we are going to use TradingView, and let's set up the Bitcoin versus US dollar 15-minute chart. Once you got that, open up the Indicators tab and let's add our indicators. The first one which we are going to use is our entry signal indicator, which will be the stochastic RSI. Add this one to your chart. After that, we are going to use two trend filters. Both of them are going to be the EMA. So click on the moving average exponential 2 times. And finally, let's add our stop loss and take profit placement indicator, which is going to be the ATR stop loss finder. This one. Okay, once you've added all your indicators, let's modify the settings. First, go into the EMA and set the first one to a 200 length and color it white. After that, go into the second EMA settings, set it to a 50 length and color it yellow. Finally, go into the ATR stop loss indicator settings and give it a 0.7 multiplier. It is also a good idea to change the stop loss lines to step line. Okay. On the stochastic RSI, we won't need to change any settings, so leave it as it is. Okay, now let's see the rules for long and short entries. So for a long entry, first we need to see that the yellow moving average, which is the 50 length EMA, goes above the white moving average, which is the 200 length EMA. After that, we want to see that the price is moving away and above both of the EMAs, and then we are waiting for a pullback. A valid pullback is when a candle closes under the 50 length EMA, and at the same time the stochastic RSI goes under the 20 level. As you can see, that happens on this candle. Then we are waiting for a cross-up on the stochastic RSI, that happens right here. And then we are waiting for a second cross-up, but at a higher level compared to the first cross-up. So as you can see, these are the two cross-ups. Once the second cross-up happens, we can enter into a long position. So entry level will be at the close of this signal candle. The stop loss will be at the lower stop loss ATR line. And the take profit will be a 1:2 risk-reward ratio. Just like that. And as you can see, in this case, this was a successful trade. Now let's see a short example and then go over the backtest. The rules for short entry are pretty much the opposite than what a long entry was. First, you want to see that the yellow EMA line is under the white 200 length EMA line. After that, we want to see that the price goes under both of these EMA lines and then starts pulling back. A valid pullback candle is when the price closes above the 50 length EMA, and at the same time the stochastic RSI needs to go above the 80 level. Once you got that, we are waiting for the first cross down, which happens right here. And then we are waiting for a second cross down, which happens right here, but it should be at a lower level compared to the first cross down. So if I draw a line here, you can see that the first cross down was here and the second was here, and it is at a lower level. We can enter into a short position at the second cross down. So the entry level will be at the close of this candle, the stop loss goes to the upper ATR stop loss level, and the take profit level will be at a 1:2 risk-reward ratio, right around there. And as you can see, this was another winning trade. Of course, these examples were just cherry-picked, so now let's see the 100 trade backtest and then the results. And the results are in. If you like to see more videos like this, drop a like, subscribe and turn on the notification bell so you won't miss any of my upcoming content. After my 100 trade backtest, the strategy had 32 winners and 68 losers. This means that with a 1:2 risk-reward ratio, the strategy would have lost around 4%. On the right side, you can see the non-compounding equity curve of this backtest. Unfortunately, this equity curve shows a steady downtrend and only managed to get back around the break-even level at the end. So altogether, despite TradePro's first 100 trade backtest shows great results, it does not work as well on the second 100 trade backtest that I just did. This video is a prime example of why you should never trust just one backtest. If I would have jumped straight into trading this strategy, I would have lost money. But before you write off this strategy completely, keep in mind that it may have just been a bad period for this strategy and it could perform well again in the next 100 trades. And that wraps up today's video. If you want to see other strategies that I backtested 100 times and found to be profitable, check out this playlist. As always, thank you all for watching, have an amazing day and see you in the next video.